Your insurance agent may or may not have told you this, but I guarantee the roofer standing in front of you knocking on your door is not going to tell you this. Before you file a claim on your roof, there are a handful of questions you need to answer because the wrong decision here can cost you a ton of money moving forward. I'm Jason Brinkmann, president and owner of Brinkmann Roofing. My family's had the privilege of serving over 150,000 commercial and residential property owners over the past 53 years. Most people want the insurance company to help cover the cost of a roof replacement when necessary. Yeah, that's completely understandable. Roofs are expensive, insurance is expensive, and that's why you're paying premiums. But filing a claim without understanding how it can affect you can do more harm than good. Today, I want to walk you through what to consider before you make that call. First question, was there a real storm event that caused damage to your roof? An actual storm date has to be established and to be communicated to the insurance carrier when filing the claim. They're going to search their database to see if there was a significant enough storm event that caused the alleged roof damage. And the storm event is going to have to match the storm damage. If you've got a hail claim or a potential hail claim, there's going to have to be a significant hail event on record. If you've got a wind claim, there's going to have to be a significant wind event on record. They're going to search this and have that information before the adjuster ever shows up. Most importantly, do you actually have damage? And is the damage significant enough to justify a full replacement? Insurance companies will come out and buy a partial roof, and that's not a great scenario for the homeowner or building owner. Most policies are going to allow up to 12 months from the date of loss to be able to file a claim. That's something we will pull that historical data using our database to ensure that storm event is within that 12-month date of loss. Otherwise, we're going to have a conversation about whether or not that's going to trigger coverage or not. Signs that there was a storm event. Well, with hail, you're typically going to look for leaves lost, or they were knocked off the trees, or even damage to your automobile. A hail that's large enough to damage the hood of your car is likely large enough to damage your roof. Now, age and condition of your roof and density of the hail is also going to help determine that. Wind damage will often tear full or partial shingles from your roof. A lot of times you'll find shingle pieces in your yard. Hip and ridge shingles would typically be the first to go. Those are going to be your transition shingles from slope to slope. Although you're going to need damaged field shingles to justify a roof replacement claim. Perhaps the most telling sign of a storm are the hundreds of roofing trucks in the neighborhood and the door knockers beating on your door asking to get on your roof. Don't let these companies on your roof without them showing you a workers' compensation insurance policy. General liability does not cover personal injury if they fall off the roof. If they fall off the roof, your insurance company could get tagged with the claim. And whatever you do, don't sign anything. These storm chasing roofers will attempt to get you to sign a contingency agreement or some sort of letter of commitment assigning your insurance claim rights. Don't do it. They know nothing about your insurance policy. They will try and create a sense of urgency to get you to sign a contract. Hail damage in our area will very rarely create an urgent need for a roof replacement. A major wind event like a hurricane or tornado can create an immediate need for emergency dry-in, but not necessarily a roof replacement. Take your time, process the information to ensure that you make a good call. These are also the contractors that will be offering to participate in insurance fraud by covering some sort of your deductible. It's illegal in any manner. They will not be around after the storm to deal with the consequences, although you will be. Storm chasers and pop-up roofers are also not familiar with the local building codes. I can tell you after Hurricane Ike, 250, that was the number I stopped at on counting how many roofs we had to replace that were less than 2 years old, where out-of-town contractors or pop-up roofers performed and never got the windstorm certificates for these homeowners. If you carry a mortgage, you're going to have insurance. Unfortunately, these clients had to pay for a roof 2 times within 2 years. Next question is, what is your deductible and are you prepared to pay it? Deductibles are the portion of the claim that you agreed to pay when you bound the policy. Wind and hail deductibles are typically 2%, although we're starting to see more and more 3 and 5% deductibles coming down the road. Any reputable roofer will be able to provide a financing option for these high price deductibles. Why does your deductible matter? Well, in a $300,000 home, a 5% deductible is a $15,000 deductible. Typically, we can replace a roof for less than $15,000 on a $300,000 home. And so knowing what your deductible and how it is going to play into the total cost of repairs or replacement are something that need to be considered. In that particular scenario, a homeowner that files a claim with a 5% deductible on a $300,000 home, they're going to have a claim that's not going to yield any money for them. And unfortunately, it's going to count against them. Gone are the days of covering deductibles. Texas House Bill 2102 requires homeowners to pay their deductible, no exceptions. All the games with the sign credits and the advertising credits and the rebates, those are the thing of the past. Roofers are prohibited by law from covering any portion of your deductible. If somebody offers to waive it, walk away. They're not the right contractor for you. Determining what type of policy you have is very, very important. Historically, it just came down to actual cash value policies versus replacement cost value policies. And we'll kind of dig into the legacy policies just so you're familiar with them. An actual cash value policy is a policy where your replacement cost value is depreciated based on the age and condition of your roof. And that depreciation is not recoverable. So they're going to take your replacement cost value, they're going to reduce it by the age and condition, and then they're going to reduce it by your deductible, leaving you a cash payment. The illustration that is up on your screen, this replacement cost value is $44,195.80, less the non-recoverable depreciation because of the age of this particular roof. Then they're going to reduce it by $11,360 in the deductible. So your net claim on an ACV policy in this case was $24,320.54. The other type of legacy policy is a replacement cost value policy. A replacement cost value policy covers the cost to replace your roof at today's prices. Typically, it comes with recoverable depreciation. Now, at the illustration you're looking at here, same home, two different policy type. We've got a $44,195 replacement cost value, less depreciation. They're still depreciating the same amount. The difference being, if you look down at this very bottom line, the net claim if depreciation is recovered. And you can see there's a big difference between that $32,000 that this particular policy yielded being a replacement cost value versus an actual cash value policy. Focus on the underlined if. That's if the depreciation is recovered. Recoverable depreciation is a use it or lose it scenario. For every dollar you spend less than the replacement cost value of that claim, the insurance carrier will keep. And the way they do this is they're going to require proof of payment. They're going to require canceled checks, credit card statements, or bank statements showing that you've paid the deductible, paid your actual cash value, which is typically the first check you'll get through that process before they will release that depreciation. And they'll also require a signed contract by the homeowner and the roofer, showing the scope and the dollar amount associated with that. And so for every dollar you spend less than your RCV, they're going to keep. With the traditional replacement cost value policies, oftentimes the ability to be able to upgrade roofing warranties, roofing products to help save you money over time. Our most popular upgrade is our impact rated UL 2218 Class 4 impact rated products. There are state mandated discounts associated with this type of upgrade. As soon as you tell the insurance company you got a new roof, because they're going to give you a new roof discount, they're going to ask you to fill out an impact form to determine what the impact rating was on the shingles. When we get those calls, this is the number one regret we get from our clients, that they didn't take advantage of being able to upgrade to a Class 4 impact rated products because of the premium savings associated with doing so. Another upgrade opportunity is our FORTIFIED roof certification. This is relatively new to the state of Texas, but we're seeing one of the largest carriers in the state offering up to 65% premium savings for a FORTIFIED roof home designation. That is significant. These discounts are going to vary carrier by carrier, but most of them are still stuck with the Texas Department of Insurance getting approval for those discounts, but they're coming. You will start to hear more and more about FORTIFIED roof certifications moving forward. Before you get too excited that you have the right policy and a replacement cost value policy, we need to dig a little deeper. Storms have become more frequent and stronger over the past 10 years, and insurance losses are mounting. There's been a trend over the last 3 to 5 years where the insurance carriers have been shifting more and more of the financial responsibility to policyholders and limiting their liability. The most common way they're doing this are higher deductibles, but also scheduled roof benefits or limited loss settlement endorsements. We had a client recently that had an 8-year-old roof when they filed a claim. As we dug a little bit deeper in the policy, we realized that the insurance company, because of a scheduled roof benefit, was only going to pay 73% of the replacement cost value policy, then take out their $9,600 deductible. In this scenario, the homeowner was going to come out of pocket not only the $9,600, but a portion of that 27% reduction in payout. Knowing if your policy has these types of endorsements up front is very, very important in the decision-making process of whether or not you file a claim or not, just to ensure you understand exactly how the mechanics of that claim are going to proceed. Your agent's going to be your best resource for this. They'll be able to help you, interpret those endorsements. If they're tied up or unavailable, we'll be more than happy. With 50 plus years of experience we have in this industry and with the insurance companies, we'll be more than happy to kind of dive into that policy with you and help explain what you can expect out of a roof claim. Next question. Are you prepared to pay out of pocket for your roof if the claim is denied? Because I can tell you within the next year, you're probably going to force it if your roof's in poor condition. When an adjuster sets foot on your property, the first thing they're going to do is start taking photographs of your roof, your windows, your fence, just the overall condition of your property, or whether or not you've been performing maintenance on the roof and windows and things like that. This documentation is going to be put into a file associated with your claim. And more often than not, about 90 days out of your renewal date, underwriting is going to review your file because they noticed you had a claim filed, regardless whether or not it was paid or not. If the photos show your roof is in poor condition or advanced in age, your home will be more risky to insure, as worn-out roofs will fail easier than newer roofs, and you will be identified as a higher risk because you filed the claim. Your renewal may be contingent upon replacing your roof at your own expense. Every claim made is going to count against you, whether it's paid or not. When a claim is filed, the insurance company is spending money. They're paying the adjuster, they're paying the documentation, they're paying for the inspection, and they're going to want to recover that cost. They're going to do that through higher premiums, reduced coverage, or a higher deductible at time of renewal. A denied claim is not a clean slate. It will still count against you. None of this means you shouldn't file a claim. Oftentimes, it's absolutely the right move, and it's why you're paying for insurance premiums to begin with. But it should be an informed decision, not a reflex, nor should it be because of the individual standing at your front door telling you, hey, you got a roof claim, you need to file a claim. We want to spend the time with you to talk about that and make sure it's the right recommendation for you. If you do decide to move forward with that claim, it's imperative that you share that paperwork with your roofer, because that's the only way we're going to be able to help you help explain the information, to determine if the insurance company left something off the estimate, and ensure that you are receiving everything you have coming on that loss. If you want to walk through your specific situation before you do anything, call us. The conversation's free. We'd rather spend 20 minutes helping you make the right call than watch you deal with the consequences of the wrong one. Appreciate you taking the time to learn a little bit more about some of the questions you need to ask before you file that insurance claim.